Let's go. Okay. Let me know whenever you guys can hear me. I'm still getting used to this thing. Sometimes it has a 5 or 10 second delay. So I'm going to let that run out if it is. If you guys can hear me right now, well, then that's the awkwardness of live streaming right there. Coinbase. All right. Let's get into some Coinbase numbers. Once you guys can hear me, I'm going to wait for some chat messages, anything along these lines, and then we'll get started. Hopefully, everyone had a good long weekend, or at least I did here in Canada. It is, right? Yeah, perfect. Joshua, I've been meaning to reach out to you. However, it's a lot harder to actually connect with someone um, through YouTube. It's not a great social platform in terms of actually reaching out to people. But Joshua, if you're still interested, I saw your comment on the weekly to actually mod and help me with you know, some things on the channel. I'd love your help. I'm not really looking. I said last time that I was worried about people swearing. I don't think swearing is necessarily what I'm trying to cut out on the channel. I think it was just directed hate, like just swearing at someone, which is something that I really don't I don't think that's good. And actually, I think it can actually hurt me as a YouTuber. If someone's doing something terrible in the chat, it's actually my responsibility through community guidelines that you have to take care of that. Okay, who is ready to jump in? Coinbase. Let me. Vadim is in the chat. I didn't know that you watched any of these, but I love to see you here. And get on the Discord, Vadim. I haven't seen you there. I'm sick of you being in the Twitter. Okay, get on the Discord. If you guys don't know what I'm talking about the SoFi weekly Discord, covering everything SoFi and also branching out into other fintech stocks. That's exactly what we're doing here today. Also talking about a very, very, I guess, I don't even know what the word is. Controversial? I don't know. Crypto, not everyone's into it. I do personally hold a position in Coinbase right now. It's not a huge position, but it is definitely big. I'm very red on my position. I've been buying a little bit in the 40s ranges to try to fight that off. However, not too much, because obviously this is one of those ones where it's a total make it or it's a total zero. So be cautious with your money whenever investing in very speculative stocks like this. Okay, let me see what we can show you guys here. Boom. You guys see that? Coinbase shareholder letter. They haven't put out their full 10K yet. That'll be coming soon. That's their full year big financial statement. However, right now they do have their shareholder letters or their investor presentations, whatever you want to call it. It's practically the same thing. Okay, let's go through and actually look at some of the numbers. I already did a quick sneak peek of this earlier, just so that I can update my spreadsheets. Yes, there will be spreadsheets, guys. I did upload a little bit of a one for Coinbase today. However, I'm not going to be following this stock too closely on the channel, but I still do want to, during quarterly updates and things like this, to take a look at Coinbase because it can be very important. Okay, net revenues. This is a scary thought, whenever you're looking at Coinbase. From Q4 of 2021, we saw, almost $2.5 billion worth of net revenue. And if you guys would rather stare at this, I do have all of the quarters. But, just for the sake of it, I can hide all this. To actually just look at the net revenues here as well, if it makes it any easier, and then expanding through other quarters as well, just to go a little bit, a longer term basis. I don't have every quarter, but I did, most. Okay, but let's just go back to the shareholder letter for now until I hear differently from you guys, and then we can switch it up. All right, looking at net income and loss, this is a true tragic story right here. You know what? Coinbase used to be extremely profitable during, Q2 of 2021, Q3 of 2021, whenever the crypto markets were at their absolute highest. And now that they're actually starting to drop really, really low. They're, investments that trying to grow as being Coinbase, trying to expand things like, Coinbase Cloud or Coinbase Prime, which is where they put a lot of their money into, a lot of regulations, global regulation, right? They kind of have to be the best friend to every single government, across the world. They are Coinbase Global. So, lots and lots of expenses that have never stopped because they don't know when the market's going to come back and they want to be stronger for whenever those markets come back. There's a term in this called crypto winter. It's such a great term because whenever everything starts to slow down and everything like this, people are still building, people are still doing all these things. So whenever it does ramp up, hopefully, Coinbase will be the ones that people want to select. Okay. Has SoFi released their 10Q, or 10K, I guess is what you should have said because it's their Q4 earnings? No, they have not. I just checked right before this live actually went up. So hopefully, maybe, it'll come by this week, but they keep pushing their earnings earlier and earlier, but they're not pushing their 10Ks and 10Qs earlier. So although we're actually getting to see a lot of the numbers earlier, which I'm happy to see, the distance between that and their actual financial statement getting dropped is getting longer. So before it was like, oh, well, you have to wait till next week. You'll have to wait a couple days. Now you'll have to wait weeks because it's, it was pushed all the way to January 30th, I think, if I remember correctly. Vadim will correct me on everything here. Okay. I just wanted to check if Joshua had sent another message. He did not. What a guy. What a guy. Okay. Let's see some things here. So just the market, crypto market cap versus the NASDAQ. What a sad thought, eh? The UST disaster. That was the Terra Luna disaster that actually happened, which crashed the crypto market. I couldn't believe whenever that was happening. Celsius, Voyager. I lost some money on Voyager. I used to hold that stock. Never did sell out of it. I just, took a massive hit on that. And then FTX. Crazy. And it's crazy how a lot of these were actually all interconnected. So a lot of them, like UST actually brought down Voyager and Three Arrows Capital and these sorts of things. And then, FTX had so much capital in Three Arrows Capital, Celsius and Voyager and all these things. And then, that was just more of a blatant fraud rather than just, being overcapitalized. And then they also just went down as well. They were using QuickBooks as their big accounting for billions and billions of dollars. Coinbase is not the same, by the way. They are audited by a top 4 auditing firm. I think they use Deloitte, if I'm correct. Someone will correct me in the chat. Okay, let's look at some of the points here. Let's see what's going on with this market here. So average Bitcoin prices in January 2023 were still up 80% compared to the average price in 2020. Monthly active developers in crypto have more than doubled since 2020 to over 20,000. That was a great article. I wish I could actually bring it up. If I do a separate video past this actual live stream, that is something to actually show. The crypto developers, these people that I keep saying are building during this time, they have grown as the market caps have grown, but then as crypto has crashed, they have not left. So the amount of developers just continues to grow over time, which can be a good thing, right? The thing that will bring crypto back is more utility. Things like whenever you're looking at Bitcoin or Ethereum, some people just say, okay, well, if it's not going to replace a reserve currency, then what's it actually for, right? It's still expensive to transact. It's still all these things. What's the point? And obviously, as security and Bitcoin maximalists, they will argue that Bitcoin is the true future through the Lightning Network and everything like this. I don't want to get too technical there, but there are a lot of cryptos that I actually like. Like for example, I'm a big Solana fan, and the reason is that it's cheaper to transact in Solana than it is to like the amount of energy, for example, that it takes to transact a Solana transaction is less than a Google search. And if you can actually sell, for example, one of the ones that actually held real utility was a Coachella ticket. And so Solana NFTs allowed people to buy lifetime Coachella tickets on the Solana network. So although you might not believe in the NFT market, and I sure as heck never did. I mean, I was never into the, random pictures or the Bored Apes or whatever they are. But if you're actually, a Coachella fan or something along these lines where you can get real utility out of saving money off buying these NFTs, then it's really hard for the price to go down if people actually value going to that real world event. Right. So in that case, it does actually have real utility, especially if you can transact it between someone else at the cost of, fractions of a penny. I used to have an editor on this channel. I still do. I just haven't, used them in a while. And they were international, and I used to pay them through USDC, which is actually a stable coin, and it would be done on the Solana network. So I'd pay less than a penny to send, a lot of money through all the way internationally, which if we were to do PayPal or something like this, which is what we used to do, they would take like nearly 4%. And that difference is real utility, right? And if there's not going to be a Western Union or a company like this that's actually going to offer cheaper rates than Solana or some of these, really, really low cost cryptocurrencies, then that is real utility. And even if it's going to take over just the remittance market, that still is a massive, nearing $1 trillion market at this point. So I am actually a believer in crypto, whether it's going to replace everything, like some people would say, like a Michael Saylor or something like this. I don't quite believe, but yeah, I do believe in crypto overall, and I do believe that a company like Coinbase, if it is going to be big, will be some of the only companies to survive. And I think that FTX's market, crashing at first, whenever that originally happened, people got a little bit worried about Coinbase, and then people started to realize, oh wait, this is actually a great thing for Coinbase. This means that a large competitor of theirs wasn't actually legit, but yet the numbers, going public, taking the routes of getting a big, a top 4 auditing firm and everything like this are the right steps for a real company to do. Now, that doesn't mean that Coinbase is success or is absolutely owning right now, because they're not. They're, people are still not really into the crypto market right now. Q1 is actually looking better than, Q4 was. Maybe I can bring up a chart of this. I'm going a little off topic, guys, I know, but if you've been watching the channel, you guys know that that's always the case. Okay, let me see if I could actually just lower this timeline here. I'll try to grab, what is it, like here to there. Okay. This first half of this chart, so from practically, what are we looking at here? About here is Q4. Okay, this is the market that we are currently in right now, and this is what Coinbase is actually showing off. So whenever we look at these numbers, think of this chart. This is the overall total cryptocurrency market cap, and depending on the market cap is the percentage that Coinbase is actually going to take on all of those transactions. Now, on top of that, they also have other businesses that they try to, get away from this market cap, and they are growing in that space. And that's really all the growth that they're seeing right now is in subscriptions and services and these sorts of things. But whenever we look into Q1 on this side, right now, so far, it does look like a great time. Can I go back? No, it won't let me. I'll just try going a little bit further. Yeah, so practically around here going forward is Q1. So far, if that trend does continue, Q1 can be an amazing quarter for Coinbase, and Coinbase stock has already seen that. Let me see if I can bring that up as well. I definitely want the stock on hand. I know today's market was not the best going into these earnings. Guys, the earnings call, by the way, is at 5:30. So let me check here. Well, actually, they're jumping in soon, but I think we're just going to get elevator music in 30 seconds. But I'll have that in the headphones, so I'll know whenever to switch over. So we're all good there. Okay. Let me see what you guys are saying. I don't know how people end up like true streamers and ending up trying to entertain or talk at the same time as reading the chat. I mean, it's truly insanely hard. And my chat doesn't even go fast. Like, I don't know how anyone reads this. Okay. Let me see if I can bring up the stock. Oh, I'll put my phone in. Do not disturb. Okay. Aftermarket, 3%. Getting back a little bit of what we lost, yesterday, or today, I guess, just after hours. It's because their actual revenue beats. I didn't even tell you guys what we're looking at. So pretty much what we are looking for was revenue was expected of $588 million. Whenever we actually go 588 million, we actually saw 605 million. So that was a, oh, I'm getting elevator music now. Let me go ahead. New music. Okay, cool. So that was a beat on net revenue. And then whenever we're actually talking about their losses here, because I want to make sure I have the right numbers for you guys, I think we were expecting, yeah, nearly the same amount in terms of net losses. So negative 600 million, and we saw negative 557 million. So there was actually a beat on both the net revenues and the net incomes. So that's also probably why we're seeing the market up 3% on Coinbase. But that being said, it still is terrible numbers. So we're not rushing back to IPO prices of, you know, wherever we hit $400 a share or something along these lines. No, we'll still be down, you know, in the $60 ranges. But if we actually look back, like just back in December, whenever I was showing you guys before that run up, like I said, in the crypto market cap, like right here, for example, this is a great correlation with Coinbase stock and the actual crypto market. This is why you follow this. I just am on coinmarketcap.com. This is what I like to use. It's very plain and simple. So as this actually runs up, so will the stock, because people are getting, you know, quite bullish on the idea that if the market goes up, obviously the transactional revenues go up as well. All right. Let's take a quick look at my spreadsheet here, just because it might be a little bit easier for me to actually track for you guys. Okay. So whenever we look at trading volume, and I can make this a little bit bigger for you guys. Boom. Okay. Whenever we look at trading volume, this is Q4 of 2020. Okay. So just keep an eye out for this one. And then every single one after that is all separate quarters. Trading volume has went from, you know, $89 billion up to, that should actually be in the billions. But as you can see, it has, aside from Q1, Q2, and Q3, massive trading volumes. We started to see a big decline in the overall, just trying to grab these and hide it. Okay. Then we started to see a massive decline in the crypto markets. All right. And this is separated between retail customers like you and I, if we're ever on Coinbase Pro or the Coinbase app. I actually think they're integrated now into the same thing, versus institutional buyers, which Coinbase still holds up the record of being the largest player in that market through Coinbase Prime and these sorts of things. They recently actually got partnerships through, you know, BlackRock, Aladdin, and these sorts of places, which have, you know, $9 trillion worth of assets under management. Doesn't mean they want their whole portfolios going into crypto, but if they are going to be using crypto, at least they have the option to buy through Coinbase. Now, the take rate for, you know, whenever people actually do buy or sell crypto, retail versus institutional, it is night and day. Okay, it's not even close. It's 1/1000th, 1/100th, or something like this of the total amount of revenue or their take rate between you know, retail and institutional. And I should have actually updated the spreadsheet to include those take rates. That way we could see it. However, I didn't have the time today. Let's look at their total net income. So split across every quarter, we're starting to just see quarter over quarter, just a little bit of an increase, which was very exciting. So where did this come from? Not transactional revenue. This has actually decreased quite a bit whenever it comes to retail traders. But it's in the subscription and services revenue, where, let me find the big one. Yeah, it's just interest income. Look at this, guys. So going from Q4 of 2021, we saw, you know, 7.6 million, 10.5 million, 32.5 million, 100 and almost 2 million, and then 182 million. So this amount of interest income is absolutely spiking. And then, yeah, some pretty similar ones to what we saw previous quarters. It's all just going to be, this is sort of a play that I think you're betting on a company that's actually growing internally, paying out, you know, real incomes, or potentially once the losses are over, which we have seen. We have seen net incomes from Coinbase previously whenever the markets were high. And it's sort of a play that if you do believe that the crypto market will come back, that obviously, you have a great equity play and something that's growing over time. Okay. Okay, let me double check here. 10 minutes till the actual call, and then we will get to hear, hopefully, Brian Armstrong. I know he's missed out on. I'm a big fan of his. Okay, Sterling, are you going off about what crypto that you like? You seem to be a big fan. HBAR, I've never held that. Okay, who else has a partnership with Google, by the way? Coinbase. Speaking of, and Solana, another coin that I also spoke about. Google's actually quite forward with the cryptocurrencies currently. I think they see a lot of the possibilities. Sorry, just reading here. Okay, so in Q4, we saw net losses of 557 million. Full year 2020 net loss was 2.6 billion. Including nearly 700 million in unrealized non-cash crypto asset impairment and impairment to our venture portfolio. Yeah, that would suck, right? If you have a venture portfolio of investing in a bunch of, poop coins or whatever, and projects that you think would have blown up, this year would have definitely been the wrong market to actually start investing in those things. That would have definitely been a crap show for sure. Okay. We ended Q4. Oh, yeah. Capital and liquidity is very important whenever it comes to cryptocurrency markets. So let me read this really quick. We ended Q4 with 5.5 billion in total available USD resources, which we define as cash and cash equivalents, USDC, and custodial account overfunding. USDC, by the way, is like the stable coin version. It's cryptocurrency pegged to the actual US dollar, and it's so far USDC has been so stable that they count it as a cash equivalent as well. It's also what I pay, my editor sometimes whenever I use him, and you guys will know whenever I use him for my videos because they look a heck of a lot better. All right. Since crypto trades 24/7 and banks are not open 24/7, we're not able to settle these accounts in real time. To calculate this balance, investors should subtract customer custodial cash liabilities from customer custodial funds on the balance sheet. All right. Okay, credit and counterparty risk. Risk management is the first principle in our product design. Should be, especially with really, really risky times like this. It's all people want to hear from Coinbase is how are you protecting our money? No one's even trying to make money right now in this company. They just want to make sure everything's fine. And if the market comes back, then we'll worry about the money. All right. No credit losses from our loans to customers. No blocking of client withdrawals or loan recalls. This is to everyone that thinks, okay, well, no wonder they're not blocking customer withdrawals. But if you actually saw the crypto market, it was happening all over the place. So it's really important that we weren't like a Genesis or a Celsius or a BlockFi or any of these other markets that were actually blocking customer withdrawals. It was a terrible look, and Coinbase was not doing that. No changes in access to credit for our institutional trading clients, and total exposure of 14 million to counterparty insolvencies, consistently entiring of deposits on FTX to facilitate business operation and client trades. Oh, wow. Yeah. So just because they had money through FTX because people would trade back and forth so often, they actually lost this money. We had no material exposure, including BlockFi, Voyager, and Genesis. Well, Coinbase was smarter than me on that Voyager play, I guess, because I got hit. You should have seen, the numbers they were putting up. It was so fantastic. But that is, sort of the big gray area of crypto is that they can be so over leveraged and it won't show up anywhere on the balance sheet. It's kind of scary. So, and really, what you're hoping from Coinbase is because they are public, because they are such a big name, because they do have the big auditors, that they are being honest about what they say. But then again, I could lose all my marbles on Coinbase as well, and that's just the nature of the game. So it's definitely not one of my larger plays, But whenever it does come to cryptocurrency risk, this is really my risk in cryptocurrency is Coinbase, a little bit of Bitcoin, Solana, those sorts of things. Let me see if I love graphs for you guys because it's really, really easy to understand. But I also want to see this outlook as well. No graphs, but I mean, what they're looking for is subscription and service revenue, 300 to 325 million. Is this really all they're talking about? They're not talking about monthly active users or total revenue or anything like this? Okay, let me see what they... Given the unpredictability of crypto markets, we have limited certainty around the rest of the year, but in spirit noted above, we are operating toward a goal of improving adjusted EBITDA in absolute dollar terms versus full year 2022 and believe our recent cost reduction efforts have positioned us to do so. Wow. I can't believe that. They're not giving really any guidance. I mean, you might as well just come out and say we're not giving guidance rather than just saying, oh, one segment of one of our businesses, we're thinking it's going to be in this range. Yeah, weird. Restructuring expenses, roughly 150 million. Gotcha, okay. Including $200 million in stock-based compensation. I'll also have to look at that as well. Their stock-based compensation is mostly like any other growth stock where it's high. They definitely give their fair share to a lot of people. Speaking of actually management and these sorts of things, by the way, we go live in, well, I mean, we're live right now. The call goes live in about, but what I will say is that, sorry, the music just came back on for some reason. All right, relax. Okay. What I also want to talk about, Shopify. This is a company that I actually should have done a live for because it was really, really interesting to follow. Wasn't the best. Great to get a good look at what they had to say about the e-commerce market. Toby Luckey. Okay, this is the CEO for Shopify. Why am I bringing him up? Well, he had been recently appointed on the board of directors for Coinbase, and ever since then, he's been buying the stock up like crazy. With his own money, by the way, making internal purchases, well, not internal, but just buying off public markets and buying a lot of it while these prices are down. He's recently purchased over $13.2 million worth of the stock of his own money. That equals around $209,000 or 209,000 shares of the company. Yeah, just absolutely buying a lot of stock in this company. He must be seeing something on the board of directors or something where their management is going that he definitely doesn't think that his money is going to go to waste. It's a good sign for sure, but the opposite could be said about Brian Armstrong, the CEO. I think that this man is absolutely amazing. I think he's a very strong leader, but he sells the stock. he doesn't hold on to all of his shares all the time. So yeah, but then again, it doesn't seem to be worrying Toby Luckey. And as far as I know, the management here is still very strong. Brian Armstrong is, I'm a big fan of him whenever it comes to strong management that doesn't give in to, a lot of the, situations that might be going on that might make for weak management or caving under, external pressures to do a certain objective in management. He really just goes for the only thing that we care about is making a stronger company, bringing profits to shareholders, and then end up being obviously the largest crypto marketplace in the world, which they're currently not, by the way. Some people, I've seen them get confused. We are not the size of Binance. In the United States, Coinbase is a huge name. Globally, where I actually think crypto actually plays a larger role because we do have great financial infrastructure here. The rest of the world in some areas does not, and that's where crypto really shines, and that's where Binance, I guess, could be a large name. But then again, not a public company. They don't show their balance sheet. They don't show their numbers. Could be a, little bit of a risk if they are doing maybe potentially what FTX is doing, which could be overexposing themselves. These sorts of things. Okay. Which is just getting started. They should be any second now, but I'm still getting a little bit of music. No one in the call yet. Just sort of listening to this right now. Okay. I will mute that for you guys until I hear anything else, and then we'll jump over. Just a quick other thing here. So they saw the same amount of monthly transacting users as they did in the last quarter. They did not show it off in their key metrics, but if they said that they got full year actuals of 8.8, it's easy to do the math that they actually got another 8.5 this quarter, which was the same as last quarter. So obviously a strong, stable base of clients that regardless of the crypto market are not leaving, which is good, right? Let me see here what else we can find. Revenue has been diversifying with Q4. I'm on chapter 2 here is what I'm reading. Revenue has been diversifying with Q4 net revenues increasing 5% quarter over quarter, driven by subscription and services revenue. While transaction revenues declined 12% quarter over quarter in Q4, subscription and service revenue grew 34% quarter over quarter to $283 million. Oh, the call's. Let me switch over.
This time.
I will just while this lady's preparing the call, I'll be answering anything in the chat. For the most part, I won't be talking on the mic, just to let the actual professionals talk here.
You may begin your conference.
Good afternoon and welcome to the Coinbase Q4 and full year 22 earnings call. Joining me on today's call are Brian Armstrong, co-founder and CEO, Emily Choi, president and COO, Alicia Haas, CFO, and because regulatory questions may be top of mind, Paul Graywall, Chief Legal Officer, is also joining today. I hope you've all had the opportunity to read our shareholder letter, which was published on our investor relations website earlier today. Before we get started, I'd like to remind you that during today's call, we may make forward-looking statements. Actual results may vary materially from today's statements. Information concerning risks, uncertainties, and other factors that could cause these results to differ is included in our SEC filings. Our discussion today will include references to certain non-GAAP financial measures. Reconciliations to the most directly comparable GAAP financial measures are provided in our shareholder letter and on our investor relations website. Non-GAAP financial measures should be considered in addition to, not as a substitute for, GAAP measures. We are once again using Say Technologies to enable all our shareholders to post questions, and in addition to that, we will be taking some live questions from our research analysts. So with that, I'll turn it over to Brian and Alicia for opening comments.
Thanks, Anil. So I want to touch on 3 themes in my opening comments. The first one's going to be about how we're reducing our OPEX to operate more efficiently and better generate EBITDA in the future. The second theme is going to be about the current regulatory environment. And the third theme is going to be about where we are in this crypto cycle. So let's start with our reductions in OPEX. When Coinbase went public, our goal was to operate at roughly break even across crypto cycles. But the market has changed, and so we're evolving along with that. We're now evolving the business with a goal to generate adjusted EBITDA in all market conditions. In January, we further reduced headcount by 20%. This follows the headcount reduction of 18% we did last year in June. We've also worked hard to reduce the amount of dilution we're taking from stock-based compensation and adjusted our compensation policy across a number of dimensions. Our total dilution since going public in April of 2021 has been about 5%. These changes will ensure that we continue to manage dilution going forward. Now, parting ways with colleagues and changes to compensation are never easy, but I think this is helping us be a more efficient company as a result, and it positions us to better weather this downturn with a very healthy balance sheet and continue investing in the future so we can be the global leader in the crypto space. I was also really glad to see that our subscription and services revenue grew 53% year over year to $792 million in 2022. This was amidst a major downturn in crypto, of course, from 2021 to 2022. And I think this really shows that our strategy of becoming an all-weather crypto company is paying off with more predictable revenue streams. So next, I want to talk about the regulatory environment that we're currently in. In the wake of FTX and other crypto company failures, we've seen increased regulatory scrutiny, of course. But let me be very clear. I believe this is a good thing for the space and that it will ultimately benefit Coinbase. It's really easy to look at the headlines and assume that increased regulatory activity is bad for crypto, but I really don't agree with that. There's many legitimate companies in the crypto space, like Coinbase, and those of us which prioritize trust and compliance from the beginning, I believe will be beneficiaries. This really goes back to the founding of Coinbase more than 10 years ago, And when I started the company, I really decided that this was going to be a compliance-focused company. We were going to do things the right way, even if it was more difficult. And I knew that there were going to be companies that would come in and try to, cut corners. They might even grow really quickly because it's easier to move fast when you don't have to follow the rules. But they would inevitably come crashing down because, regulators don't always act quickly, but they do eventually act. We decided to do things the hard way, playing the long-term game, and built a very different company over the last 10 years. In many cases, we actually proactively put in place appropriate controls before they were even required, anticipating that this greater regulatory clarity would be coming. So I think we're really well positioned in this type of environment and how things are changing. And we need more clarity in the United States around regulation, and we probably need new legislation at some point, but I'll talk about that a little bit later. So third, let's talk about where we are in this crypto cycle. Now, I think it's important to always look at the fundamental indicators that we have and try to separate out the signal from the noise and the negative headlines. The narrative in crypto, it tends to flip every few years. It's either irrational exuberance or despair. Neither one is true at any given time, but we're in one of those despair phases right now. And that also means there's an opportunity for builders who are focused in this space, like Coinbase. So if you take where we are now, or in 2022, and compare that to just 2 years ago, you kind of have to look over at least a prior cycle. You can't just look at what happened in the last year or the last quarter. So the Bitcoin price in January of 2023 is up 80% compared to the average price in 2020. The number of software developers working in crypto has doubled since 2020, and that's a great predictor, I think, of where the future is going. The number of major brands who've started integrating Web3 and NFT technology is totally different. Starbucks, Adidas, Nike, Coca-Cola, and social media platforms like Instagram, Twitter, and Reddit. These are all integrating crypto services into their products, and customers who use those things are going to need a wallet, a crypto wallet. That's where Coinbase comes in. We've even come a long way on the regulatory side. Outside the US, just about every major financial hub is vying to be the leader in Web3. We've seen a comprehensive crypto legislation get passed in the EU with MiCA. Even the UK, Hong Kong, Japan, Brazil are all making very positive steps toward comprehensive crypto legislation. And I think we'll even get that in the US eventually. So in short, we remain incredibly bullish on this technology and this industry. We're operating more efficiently at this new size. We believe that we will be a net beneficiary of increased regulatory clarity. And of course, ultimately we've got to keep driving the utility of crypto, improving our products, driving more and more use cases so that 1 billion or more people can benefit from this technology and we can increase economic freedom in the world. So with that, let me turn it over to Alicia to talk about our financial results.
Thanks, Brian. First, I'm going to recap our Q4 results. Our fourth quarter net revenue increased 5% quarter over quarter to $605 million. This was driven by strong growth in our subscription and services revenues. In terms of transaction revenue first, we gained trading volume market share. Our trading volume did decline 9% quarter over quarter, but it outperformed the total crypto spot market, which saw a 21% volume decline quarter over quarter. As a result, our total transaction revenue declined 12% to $322 million. In contrast, subscription and services grew 34% quarter over quarter to $283 million. This was largely driven by our participation in the USDC program, which was supported by the growth in interest rates in Q4. Our total operating expenses increased 3% quarter over quarter to $1.2 billion, which was consistent with the outlook we provided. There are 3 factors that contributed to this slight increase in spend. First, we had higher seasonal marketing spend. Second, we saw a timing of certain SBC awards increase the cost quarter over quarter. And third, we had a $50 million settlement with the New York DFS. Absent this settlement, expenses would have been down about 1% quarter over quarter. I want to zoom out now and look at the full year of 2022. Our adjusted EBITDA was negative $371 million in 2022, well within the $500 million loss guardrail we provided for in February of 2022, about a year ago. This included negative $124 million of adjusted EBITDA in Q4. I want to note, while this was slightly lower than Q3, our revenue improved quarter over quarter, and our recurring expenses, excluding the impact of the DFS settlement, were lower quarter over quarter. So the primary reason EBITDA was lower in Q4 was due to a foreign exchange loss that we experienced in Q2 but was not fully realized until Q4. I want to shift gears now towards our outlook. Crypto markets have improved so far into Q1 as compared to Q4. Crypto market cap is up 40% year-to-date through February 17th. Crypto asset volatility is 5% higher over the same time period. As a result, we generated $120 million of transaction revenue in January 2023. I cannot underscore this enough. We caution investors to not extrapolate these results forward. We all need to keep in mind last year's experience of how quickly markets can evolve. They evolved quickly between Q4 and Q1, and they have the potential to evolve again. And we are mindful that industry dynamics across multiple dimensions remain in flux. In that spirit, we've updated our outlook approach for 2023. Our outlook is reflecting what we believe are the most stable and predictable elements of our business, specifically subscription and services revenue and expenses. And we're now providing 1 quarter of outlook. With that, we expect Q1 subscription and services revenue to be between $300 and $325 million. As Brian mentioned, we are focused on cost management and operating with discipline. That means we're more rigorously assessing our product market fit, we're taking a scrappier approach to investments, and we're getting back to smaller team sizes. For Q1, we anticipate technology and development and general and administrative expenses together will be between $625 and $675 million, and that sales and marketing will be between $60 and $70 million. When totaling these OpEx categories, this represents a more than 30% reduction in Q1 compared to the Q4 reported results. If you back out the $50 million settlement from Q4, we have reduced recurring expenses by more than 25% quarter over quarter. Embedded in that expense outlook is an expectation of $215 million of stock-based compensation in Q1. This compares to $431 million of stock-based compensation expense in Q4. So we've brought that down by more than $200 million quarter over quarter. Separately, our outlook includes approximately $150 million for restructuring expenses associated with our January headcount reduction. Overall, our goal for 2023 is to improve adjusted EBITDA in absolute dollar terms versus full year 2022. And we believe our cost reduction efforts position us to do so. As we look forward, we don't expect to meaningfully increase our headcount, which is one of our largest expense drivers, compared to our Q1 levels, which we anticipate to be around 3,650 people. All right, before we go to Q&A, I want to briefly give some context around some updates you're going to see in our 10-K that we filed this afternoon. Following the events of 2022, which included failures and other situations of financial distress at certain crypto companies like FTX, the SEC has issued new guidance in December on expected disclosures for public companies like ours that are crypto market participants. While we already disclosed much of what was outlined in the guidance, we did make some additional disclosures this quarter. So you'll see an expanded discussion of how the 2022 events have impacted Coinbase, how similar events could impact our company. We've expanded disclosures of our lending activities, counterparty risks, and the interconnectedness we have with other market participants. Accordingly, you'll see updates in our business section, MD&A, and risk factors. These are in direct response to the new guidance. The full letter can be found on the website. So with that, I think we can turn to questions. Anil.
Okay.
That's just looking for total transparency now. And that's the way we want the market to go.
We might combine questions that touch on the same themes. The first question is about, has Coinbase considered operating an offshore business, perhaps with Big Four audits and additional risk management controls, to offer new products to international investors while it awaits regulatory clarity on such products in the U.S.?
Thanks for the question. So our mission is to increase economic freedom in the world by enabling better access to crypto. So to fulfill our mission, we have to be a global company. And as such, international expansion is going to continue to be a very core part of how we operate. In the past quarter, we had a launch in Australia. We have an upcoming launch in Brazil. And we've been very encouraged by the positive regulatory developments in the EU with MiCA and the UK's long-awaited consultation. So you can expect to see us continuing to invest in the UK and Europe. They're really important parts of our business. We're going to lean into working with jurisdictions who help us maximize global coverage, and we will always be focused on offering our products in a safe, compliant way with, as you referenced, good risk management and sound audits. So there's nothing to announce here today, but international continues to be a focus area for us in 2023 and beyond.
Thanks, Emily. Next question. Has Coinbase considered updating its P&L target from operating at a loss during times of trading volumes like those in 2022 and 2023 year to date to operating at break even or profitability during such times? Alicia?
I feel like this question had a preview into Brian's opening comments. So this is not a change we can make overnight. But yes, as Brian shared in his opening comments, we have changed our approach and we are building towards the future. So we used to say Coinbase would roughly break even over time, over a cycle, but now we are very focused on building a company that can generate EBITDA in all market conditions, which is to say we aspire to be an all-weather company. Specifically for 2023, our goal is to improve our adjusted EBITDA performance in absolute dollar terms year over year. And we're going to continue to work to build revenue streams with less volatility. And while focus is on improving adjusted EBITDA, as I shared in my opening comments, our SBC or our stock-based compensation is coming down too. So we are focused on overall expense performance, and we think that will set the stage for longer improved financial performance.
Same thing across the board for every fintech
Sorry,
here. Right?
Next question. Will Coinbase expand to stocks to compete with platforms like Robinhood? Brian?
Yeah, I can take that one. So the short answer is no. We feel our best opportunities are still in the crypto and the Web3 space. There's a lot of blue ocean there. We want to go make sure we're the leader in that space. And there's a number of places people can trade traditional securities today, so I don't know how we would necessarily be differentiated on that dimension. There is an exception to that I can think of, which is that if we found a way to tokenize or wrap traditional securities, making them more crypto native, that could be pretty interesting, I think, for our customers and for us. It would unlock some additional functionality, for instance, 24/7 trading. People could more easily trade fractions of a share, or they could get access to more global capital. But the regulatory environment in the US right now is not currently hospitable to that type of product. That's something that we're working to change. We actually acquired a broker-dealer license several years ago, but it's dormant right now, and we'd like to work with the SEC to make it active. I think that something like that would allow us to wrap traditional securities could, and also just make it really simple for people to go and register crypto securities. That could be pretty interesting and something we'd like to pursue in the future, but I don't think that'll happen in the short term. So it's something we'll have to work towards over time.
Next question. How does Coinbase plan to compete with other trading platforms that allow its users to purchase crypto without fees? Alicia?
Thanks for this question. So I want to start with just a comment that there are no true zero-fee products out there. Some monetize like Coinbase do via our fees that we post, but others monetize on the back end where the fees are not transparent to the users, but there really are no zero-fee platforms. So we do generate most of our transaction revenue today from our retail customer base. They are trusting our products because they are safe and easy to use, and we're giving them an integrated platform to engage with a range of crypto assets and activities. So you can stake, you can participate, and you spend your crypto on a Coinbase card. You can do many different things. And we believe this is a premium product that our customers are willing to pay for. But we also have our subscription product, Coinbase One, where users can trade without fees. So we are definitely experimenting with different monetization models and different ways to offer our services to our customers. As we said before, over the long term, we believe fees will compress due to commoditization, but we have yet to see that in crypto. And we think that after coming through 2022, there is more value placed on a trusted platform, our regulated compliant approach, and people are willing to pay for that premium offering.
Next question. How is Coinbase working alongside lawmakers to shape U.S. crypto regulation? Brian?
Yeah, so I've been spending a lot of time in D.C. I was just there last week, actually, and I'd say policy is my top priority for this year. So when I was there just last week, we met with a number of relevant senators that are working on different crypto bills. There's actually a lot of bipartisan support, I would say, out there for getting comprehensive crypto legislation passed. There's a recognition that in the wake of FTX, we need stronger consumer protections. There's also a lot of excitement just about the potential of this technology, and there's a lot of desire for people to have this built here in America, and they feel that it's important for all kinds of reasons, economic growth, national security, et cetera. So I was very pleased to see that. I think the folks that I spoke with, they also realize that the U.S. is a little bit behind right now. The EU has already kind of passed comprehensive crypto legislation. They're looking at others like in the UK, Singapore, et cetera, that are moving on this dimension and seeing what they can take and put in their bill. So I'm spending more time in DC, but I think what's even more important than that actually is that we can go and activate the roughly 50 million people or so who have used crypto in the United States, and asking them to, as they're very passionate about crypto, many of them, and so it's about asking them to contact their representatives and encouraging them to say, we want this industry to be built in America with strong consumer protection and preserving the innovation potential. So I think we need to really make it clear that, let's say in the upcoming election in 2024, for instance, that this is going to be a big issue, I think, for a lot of voters. Crypto is now used by one in 5 households in the United States, and it's becoming a pretty powerful lobby and a constituent. So Coinbase, of course, we can do our part here by helping organize, and we've been actually giving customers information right in our app about policy issues and even scores for different candidates that represent them. But we're just one company in this space. The whole industry is really going to have to come together to make this happen, and of all the crypto users out there. So there's lots more that we're doing. We're donating to key crypto advocates. We've hired an incredible policy team. Our head of policy, Faryar Shirzad, came from Goldman Sachs, where he was co-leading policy. We're working with various trade groups. We actually wrote a really detailed petition that we sent to the SEC requesting more clarity on regulation and pointing out sort of many of the areas where in the law today it's not clear how crypto should be regulated. We have a public policy page on our website, which I encourage people to go check out. So there's a lot we can do here, and I think it's a major focus for myself and the company. Actually, Paul, our Chief Legal Officer, you want to add anything here?
Yeah, happy to, Brian. At Coinbase, we have a 10-year plus record of regulatory compliance and engagement, and we remain committed to working with regulators to develop solutions that are sensible, that put consumers first and protect them, and ultimately help to grow the crypto economy. We are in constant conversation with all of these regulators and, of course, with policymakers as well, particularly in DC. In those conversations, our agenda is very clear. Regulators should follow the standard course and undertake public rulemaking that will give clarity, not just to the industry and to consumers, but of course investors as well. The bottom line is this: not everything in crypto is a security. That's just not the law today, and it shouldn't be the law tomorrow and in the future. Securities laws doesn't exist in order to turn everything of value in our economy, whether it's baseball cards or sneakers or digital assets like crypto, into a security that only a small number of people or the elite are able to buy or trade. That's why we have to get these lines right. It's not just about crypto. And so in that same spirit, last July, in July of 2022, we filed a comprehensive petition for rulemaking with the SEC that outlined the issues with applying the existing securities into modern digital assets. And we suggested each area in which the SEC could and should engage in rulemaking in order to provide clarity for the entire industry. We're very hopeful that the SEC and others will recognize that rulemaking is the appropriate path forward. And importantly, we're not going to stop engaging until they do so. It's not too late. One final point, just recently the SEC issued a notice of proposed rule for safeguarding crypto assets with qualified custodians, such as Coinbase. We see that as a signal that the SEC recognizes and is willing to follow a standard public rulemaking process in order to get these answers right.
Great, thanks. Next question. Are there any plans to initiate stock buybacks or reduce overall debt load if the company valuation becomes low enough? Alicia?
Thanks for the question. So I would share with you that we constantly evaluate what is the most accretive way to allocate our capital. So it's something we've looked at, we've talked about, but today our focus is on cash conservation and maximizing the options that we have available to us, maximizing our ability to navigate through this transition period as we shift from being a company that has volatility in our P&L to a more stable P&L where we can have the opportunity to generate EBITDA in up and down markets. So while we have the right to revisit this, we don't have any news to share at this time around a stock buyback or a debt buyback program. I would point out that while we do not have a formal buyback program, we do generally net settle our equity awards to employees. What that means is that we pay taxes on behalf of the employees and those shares don't end up in the market. So as a result, since we went public, we've effectively bought back just over 5 million shares due to this approach. So while that's not a formal stock buyback, it has the effect of reducing shares outstanding and reducing our amount of dilution that we've put into the market.
Our next question is, with Kraken staking as a service being cracked down upon by the SEC, what differentiates Coinbase's staking as a service from theirs? And what assurances can you give investors that their funds will not be affected? Paul?
So Coinbase's staking products are not securities, and so they are not affected by this news. Staking on Coinbase continues to be available to our customers, and staked assets continue to earn rewards. The staking products that we offer on Coinbase are fundamentally different from the yield products that were described in the recent enforcement action against Kraken. The differences matter. Just to highlight a few of them, first and foremost, on Coinbase, customer assets always remain theirs. At all times, customers retain the title to and ownership of their tokens. And of course, we hold all user assets, including tokens, one-to-one. Another important difference is that our fees are tethered to realities. They're determined by the network protocols, and commissions that we take are fully disclosed in our help center. On Coinbase, our customers have a right to their returns. We can't simply just decide not to pay any returns at all. And critically, Coinbase customers have deep, transparent insights into our financials because, of course, Coinbase is a publicly traded company with public audited financials. The bottom line is that Coinbase customers have access to proper disclosures. Coinbase has always disclosed critical information for its staking users, such as what happens to assets when they're staked, and we do that in our retail user agreement. Rules making clear these distinctions would provide very real clarity, and we think the public shouldn't have to parse complaints in federal court in order to understand what a regulator expects.
Our next question is, what is Coinbase going to do to recover the value of its stock from the initial IPO? Emily?
I'll take that, yeah. Coinbase is focused on generating long-term value. We are the leading regulated player in a still nascent market, and as such, much of our economic potential will come in future years, much like it has for other new category leaders over time. And like all tech and high-growth companies, we've experienced a market reset over the past year. This isn't Coinbase or crypto specific. That said, we are laser focused on driving positive shareholder value, and in particular are focusing our energy on 1, cost management and efficiency, 2, investing in core product growth so that we offer our users the absolute best crypto products and services, and 3, landing a positive regulatory outcome for the ecosystem and for our users.
Next question. Do you feel that Coinbase can play a big role in making cryptocurrency go mainstream? Brian?
Yeah, absolutely. I mean, one of our goals is we want to get crypto to 1 billion people globally. That would tell me that we were starting to have a real impact on a global scale around economic freedom, which, the mission of Coinbase is to increase economic freedom. So I think we have a big important role to play in that, and I think it's going to happen across a number of different areas. I mean, one is scalability. We need to get the blockchains to be more scalable. There's a lot of important developer work happening on that dimension, and there's a couple areas where Coinbase has been able to help on the margin, but there's many great teams doing that. Also, in terms of usability, I think just sort of like many people don't understand how electricity works, but they can benefit from it. They can access it through a light switch. Coinbase has a role here to play in just trying to make crypto easier to use. Many people, they don't even really know how it works underneath, but they just want to get paid. They want to transfer funds with lower fees. They want to earn a living, they want to have stable currency, et cetera. And so we can make those things easy and intuitive. And then lastly, I think on the regulatory environment, we have an important role here just to play around education, advocacy, policy. So there's a lot we can do to try to help crypto get to that 1 billion user mark and beyond.
Okay, last question before we turn it over to the analysts. Coinbase NFT. 1, what is your cumulative loss? 2, what is your plan to reduce the burn, increase market share, and overall, what's your plan in connection to Coinbase NFT? What will you do differently next time when developing new platforms?
Oh,
Emily?
boy.
So we
boy.
allocate our resources 70-20-10, 70 to core, 20 to strategic adjacencies, and 10% to venture opportunities. We are always looking to expand our portfolio of products to serve our customers in the best way. And NFTs were an example of a venture initiative in that 10% bucket. And we continue to see medium and long-term opportunities here. So we've got a very lean team on it now, but we're not throwing in the towel by any means. There's a lot of Fortune 100 companies who are experimenting with NFT opportunities, including Meta, Starbucks, Nike, Anheuser-Busch. And we're proud of a product that is creating a more social customer NFT experience. We have a lot of work to do, but we want to continue to invest limited resources there. So in terms of investments, as we indicated in the shareholder letter, we're taking a more rigorous approach to investments in new and unproven products, but we're going to do that in a very lean, efficient way and get back to just smaller team sizes and getting things out there in a more of an experimental way so that we do it in the most operationally efficient way possible. USDC was an example of something that started with just a couple of folks and has expanded to be something much bigger.
Okay, thanks. So with that, Paula, let's switch and take some live questions from the research analysts.
Thank you. Your first question comes from Owen Lau of Oppenheimer.
Thank you for taking my question. So I have a question about international expansion. So yesterday, Hong Kong SFC put out a consultation paper on virtual assets trading platform. They proposed to allow digital assets trading for retail customers. So I have two quick questions here related to this topic. The first one is, will Coinbase apply for this license, or how Coinbase will approach this regime? The second part is the requirement seems to be that the platform operator has to hold client money on a trust through a wholly owned subsidiary, and no more than 2% of client virtual assets are stored in hot wallets. Can Coinbase be compliant with this? And based on your knowledge, how many exchanges in the world can meet this high bar? Thank you.
Great question if they answer it clearly.
Yeah, I mean, so this is a detailed question. I would say that in general, we don't currently have today an entity in Hong Kong, but I've been really pleasantly surprised to see that there is clarity like this. This is a great example, what you just mentioned, of the financial hubs around the world, of which Hong Kong is one of those, are making really good progress towards regulatory clarity. We'd have to look in detail to see if Coinbase met those requirements, and we don't have currently anything that we've done in that country to date. But I think it's exciting as a general trend. I don't know, Paul or anybody else, do you want to add anything?
Other things I would add is we do have a practice of holding the vast majority of funds on our platform in cold storage. And so we do have mechanisms in place to keep a very small amount of assets in a hot wallet or subject to cyber risk, which is one of the requirements. I also think that Coinbase has operated Trust Co. for a number of years now. And so there's definitely parts of our business that we could lean on if we chose to build in that market. Our broad international strategy, as we outlined in previous years, is we have a go broad and go deep. At this point in time, we don't have any announcements on adding additional countries to our portfolio. We're focused on building in the countries that we're currently in. But conditions like you provided, having clear regulatory structure, are markets that become attractive to us. So at the time that we were adding new countries to our list, we would look at that as a positive indicator of a country that we could go into and assess our ability to comply with those standards.
Got it. Thank you very much.
Your next question comes from the line of Devin Ryan of JMP Securities.
Hi, this is Michael Falco, actually standing in for Devin. Wanted to ask a quick question. You highlighted your goal for 2023 is to improve full-year adjusted EBITDA in absolute dollar terms versus 2022, and then that you're setting your sights on positioning the company to generate adjusted EBITDA in all market conditions. So it seems like after the current 25% plus expense reduction, you believe this is a reasonable goal. Just curious on the revenue side of the equation, what are the revenue scenarios kind of underpinning that, and what's the revenue threshold that would make that goal achievable?
Great question. So as we shared in our outlook, we're really focusing our near-term outlook on things that we can control. So our subscription and services revenue, we believe, can grow $300 to $325 million in Q1, which is healthy growth off of the reported results of Q4. We've also seen a lot of volatility in our transaction revenues, and we continue to see volatility. as we saw that crypto market cap is up 40% quarter to date in Q1.
Like the most important thing she could have said, and she cut out.
Transaction revenue to be volatile. It could be up, it could be down, it could be static over the year. We are preparing for that range, and we are preparing to grow subscription and services against this more moderate expense base. There are scenarios that we could be EBITDA positive this year, but the goal, because we're preparing for the worst and hoping for the best, is to ensure that we improve EBITDA year over year. And that is what we're setting at this point in time. We will continue to update you as we get more data points as we go through the year.
Great, thank you.
Your next question comes from the line of Kenneth Worthington of JP Morgan Securities.
Was she not giving
Hi,
outlook
good
on
afternoon.
Q1?
Thanks for taking the question. Maybe for Brian, Coinbase has historically been a large investor in crypto businesses and technology, and based on the number of developers, innovation continues at a robust pace in the crypto ecosystem. The industry has had big leap forwards with the development of DeFi and the popularity and use cases for NFTs, for example. As you look to 2023 and 2024, are there use cases or developments on the level of DeFi or NFTs that particularly excite you? And maybe broadly, what do you see as the next big leg forward for use cases in crypto?
Yeah, well, okay, so we always have to be a little careful when you're trying to predict the future, especially if it influences anything on the M&A front. So let me keep my comments just pretty broad here. But you're correct, we have been investors in the space. I think we recognize that this is the beginning of a big trend in big industry, and we're going to build our own products. We're going to also buy other companies, but we're also going to invest. And so we do all three: build, buy, and invest. You mentioned some of these areas that got popular in prior down cycles. We had DeFi and things like that, which were exciting, and NFTs. A couple areas that we're excited about, just kind of looking forward. I think decentralized identity is exciting. It allows crypto to move beyond just a new form of money or new types of financial services, but also it allows the beginnings of a new type of app platform, right? And if you have a decentralized identity where people can kind of have access to their own information and it's not owned by one of the big tech companies, then you can start to do interesting things like create a social graph between those identities and have decentralized social networks. You can even have reputation associated with those decentralized identities, kind of like a FICO score, if you will, or something similar to Google PageRank algorithm, which ranked different pages on the internet. But you could sort of have a reputation for each of these decentralized identities. So that's one area, just among many that I'm interested in. And we generally try to look at the landscape of startups that are coming out. There are a lot of developers, as you mentioned, operating in this space now. That has actually continued to grow, even in the market coming down. And I think if you look at where the brightest young engineers are focusing their time on the weekend, what they're hacking on in their free time, I think that's a really good predictor of the future. And so by that measure, crypto is doing quite well.
Okay, thank you. If I can sneak in another one just quickly for Paul. The SEC Chair Gensler continues to say that he wants crypto firms and crypto products to register with the SEC. What is the risk to Coinbase or the downside of registering either firm or the products with the SEC?
Well, Coinbase is certainly familiar with registration with the SEC, and then, of course, as a publicly listed company, we were required to complete an S-1 back in April of 2021. We're also quite familiar with the chair's comments regarding registration of individual products and services. To the extent that registration is appropriate, because first and foremost, products and services qualify as securities under the federal securities laws, Coinbase is quite open and eager to seek a path to registration where one is made available. I think it's fair to say that at this point in time, the path to registration for products and services that may qualify as securities has not been open, or at least readily or easily open, and so that's proven to be challenging. But we're always eager to pursue a registration where it makes sense, and we will continue to engage in conversation and dialogue where we have an opportunity to do so with the SEC or anybody else.
Okay, great. Thank you.
Your next question comes from Lisa Ellis at SVB MoffettNathanson.
Terrific. Thanks for taking my question. A follow-up there on the regulatory front. I know, and policy front, I guess, more broadly. You have highlighted now several times that you expect 2023 to be a significant year for crypto policy. There's a lot of moving pieces here for us. So in your view, overall, what are the top 3 or 4 things that would constitute a win on the policy or regulatory front over the next year?
Yeah, well, I want to temper expectations a little bit. I think anytime new legislation gets passed, it's kind of a lot of stars have to align for that to happen, and for good reason, at least in the United States government. So we're going to keep pushing on that. We don't know exactly what the chances are of that happening specifically this year, but I think over time the chances are quite good. There's a number of different areas that people are looking at. I mean, one of them is simply on the stablecoin front, and I think there's generally pretty broad consensus amongst Congress, the folks that I've spoken with, that we do want to bring that into the regulatory perimeter and some new legislation that just had some good best practices around, making sure that funds were audited, things were backed one-to-one. That would be a great win, and we could see some progress there. I think the other one is really around how to carve up the territory between CFTC and SEC. What's a crypto commodity? What's a crypto security? What is something else entirely, like a stablecoin or artwork like NFTs? And I think we could use sort of an updated definition of the Howey test, which was created, before computers even existed back in the 1930s, and really kind of clarify how does this apply to digital assets. I think that would be another core piece. And there's a number of other rules there that I think just, again, apply the best practices from traditional financial services around let's have a great anti-money laundering program and get rid of any kind of wash trading and, reasonable kind of KYC procedures and things like that. So those are a couple of the things that I think would help. And then if we get all that stuff working, then we could probably think about how DeFi could fit in the regulatory perimeter or not. And so these are all different areas that could be looked at, but probably stablecoins and some of those early things would be the first ones that get looked at. Paul or anybody else want to add anything?
The only thing I would add, Brian, is that back in July of last year, as mentioned earlier, we did file a petition for rulemaking with the SEC that outlined dozens and dozens, something like more than 50 questions that we believe need to be answered in order to bring regulatory clarity to the digital asset space. We think an excellent start would be to initiate rulemaking as we requested, so that not just Coinbase, but everyone in the industry, and frankly, anyone with an interest in digital assets can have an opportunity to provide input to the Commission and help the Commission achieve the right balance between protecting consumers and investors on the one hand and promoting innovation on the other.
Your next question comes from the line of Pete Christensen of Citi. Pete, your line is open.
I'm sorry, can you hear me? Hello?
Yeah, we can hear you now.
Oh, okay. Just remind us how would you think about how monetization can show up primarily from Citi, and then I just have a quick follow-up.
I'm so sorry, Pete, you cut in and out. We heard a question on monetization, but we couldn't identify which product.
Is that better? Sorry. If you could just take us through the integration with Aladdin and how we should think about monetization progressing there. Is that going to be primarily through custody?
Oh, I'm sorry. Thank you for clarifying your question. So we don't have a material update on the integration with Aladdin. As we announced, we are now integrating on the back end, but the monetization is going to be that customers who have Aladdin can also onboard into Coinbase. And so we're hopeful that what this does is puts crypto side by side with other stocks, bonds, or tradable assets of hedge funds and asset managers. And it enables them to risk manage, have operational controls, to measure it in crypto that they could in other asset classes. And so those customers would also onboard onto Coinbase and trade on our products and services and monetize on our platform. And then there is going to be obviously some sort of commercial agreement between us and BlackRock that we haven't provided public information on at this time.
That's helpful. And then finally, Brian, I would love to hear your take on kind of like the pulse right now at the company. You're now on your second restructuring. Obviously, there's just been a lot of volatility all around. Just wondering if you could comment just basically on the pulse of your people there. Perhaps, what the sense of how employee engagement is faring under these conditions.
Yeah, I can touch on that just briefly. I think actually overall engagement is pretty good. We have a lot of people who are really just passionate about the mission, and they want to see this happen in the world. And so some of them have been through crypto cycles before. I mean, this is the fourth one I've been through, but many of the people at the company have gone through crypto cycles before. They're relatively unfazed by it. It's only people who maybe it was their first time going through something like this. It's a little scary, but they've seen when people were irrationally exuberant and when people had despair about crypto in the past, and they've kept building. And I think what people ended up realizing was that actually in the down cycles, it's sometimes better that you come to appreciate the down cycles because there's less noise. All the people who are in it for the wrong reasons kind of wash out, and the people who are true builders in the space kind of have some time to get some real work done. So a lot of the best innovation actually happens in down markets.
That's helpful. Thank you.
Thank you.
Okay, well, we're at time for today's call. So thank you for joining us, and we look forward to speaking to you again on our next call.
Thank you. This concludes today's call. You may now disconnect.
All right. Let's, look, I was going to do a full recap of everything that they said, but honestly, they gave such little information on that call I found. We're working with regulators. We don't want to expand into other markets right now. We're working on markets that we're already in. I mean, that was a good clarification. I'm happy they did it. But in terms of actual numbers, or even I thought the BlackRock Aladdin question was great. Are we starting to make some money from this? How's this actually working? This was an amazingly large partnership. We're not actually spreading that publicly right now. Okay. Are you going to be spreading this publicly eventually? Well, maybe, but not right now. It's okay. They were very, very quiet about guidance for next quarter, about, new products going forward. I don't believe in the social aspect of crypto or these sorts of things. I don't think that, I believe in the transparency of crypto, but in certain aspects, I don't think everyone wants to have their bank accounts public and be able to see their friends and families, how much they're actually holding in their accounts. I think these are private things that people care about. Especially if people are doing well, you don't want your family or friends judging you, depending on how much you actually have in your pocket. So in those things, I actually don't think that crypto does have a case. But I'm no Brian Armstrong, so maybe he's seeing things being developed in the markets and these sorts of things that are just phenomenal and that make things better. And in the world today, where we're looking at, large payments for things like Twitter Blue and Meta Verified and these sorts of things, where it's people are just verifying themselves as being human and willing to spend lots of money to do so. Potentially, Web3 might play a role in that or something along these lines. But even going to that, it's how do you monetize that to a degree where it makes a significant impact for Coinbase? For example, I look at Coinbase Wallet and I think of almost a way of Google Chrome. It really does help the actual spread of the overall market in terms of search or something like this. But how does Google actually monetize on Google Chrome specifically? And I'm not talking about Google Search, and I'm not talking about other products that are linked to it. I'm talking about specifically Google Chrome or specifically Coinbase Wallet. Well, the truth is they really don't. They're kind of loss leaders for them, and it improves the overall market, but necessarily doesn't help with monetization. Things like Coinbase Prime through BlackRock, Aladdin, these sorts of things. Expanding the actual products internally in each country. I did think that that was an interesting thing. For example, I'm in Canada. We don't even have Coinbase cards or anything like this. The actual products that we're able to do is buy cryptos, throw it on our own external wallets, and then transfer it. And that's, 99% of why I want crypto. But let's say if I did want to actually, tap and spend my crypto, maybe I was just a really big fan of the market and wanted to use, my USDC or something like this and just spend it at a convenience store. Well, I don't even have the option to do so. So I would be looking forward to, potentially a Coinbase card or something like this. I would expand my relationship with Coinbase by far out of any other company in the cryptocurrency area. I trust I trust Coinbase by far more than any other one. I don't use another exchange. Actually, in Canada, there is another small exchange that is pretty common here called Newton. But then again, they are an extremely small player, but I might use them. Sometimes the spreads are a little bit different. But aside from that, no one really competes with Coinbase in terms of the trust and transparency. Even with their fees, almost to a point where they said that, if you're not getting hit with the upfront fee, then there are fees on the back end and these sorts of things that are not as transparent. And we just want to be that company that, although it doesn't look as good to say, hey, you know what, you're getting charged, 1.5% or something along these lines, it is the most honest and truthful way of actually running the business, rather than, maybe taking the Robinhood approach or something like this, where you're throwing your fees on the back end and not actually showing people how the price of what they're paying for has a spread on it or something like this, which is the most common other way that these crypto companies actually do make money on you. They make a spread. They buy the coin, they sell the coin at a different cost. Every single company does it. For example, Block Incorporated, Cash App, if you're buying any Bitcoin through there, they'll put a spread on the Bitcoin. By the way, Block Incorporated, their earnings results are coming out Thursday. I'm going to be doing the exact same thing. Little earnings review, little spreadsheet. And then as we actually talk about these companies more and more often, I'll build up on those spreadsheets, and then we'll start to get to the level of, like, if you guys have seen the channel, my SoFi spreadsheets are just, I've got 12 different pages looking through partners and all the financials, all the products. So although I've covered Coinbase and held it for a while, I don't actually, make the spreadsheets to look the way they do. I do it a little bit differently for myself. I don't have to see it like the way I bring it out. I'll just read the sheets the same way you guys do. Amit, how's it going, my friend? I'm taking over on the live streams, all right? And this is my job now. Hey, everyone, if you guys do watch Amit, make sure that he's on the SoFi Weekly this week. I like hosting it, but you know what? There's no host like Amit. But what else did we see from the call? It was quite quiet, and they are making a lot from their subscription and services, which is exciting, because if things do actually turn around and the transactions actually do come back, like what we're already seeing, if people are here late. Let me show you. Let me bring up a quick spreadsheet for you guys, because this is actually quite important, or a quick chart for you. Oh, okay. Let me share my screen. Cool. Okay. If we're actually looking at the total market cap of cryptocurrency in general, whenever we actually can bring it, let me see here. Somewhere along these lines. It's actually exactly, boom. Okay. This is this quarter going from, let me cut it in half. I'm looking for, okay, it's exactly here. So this was the quarter that we just saw. This market cap is where all the transactions are currently being seen. Now, the problem or the great thing about this is that it was actually down compared to whenever we compare it to going forward. Into the new year, or Q1 of 2023, the market is starting to improve. Now, if this improvement can continue to happen, Bitcoin and all these other, solutions continue to climb, or prices, sorry. I was trying to read the chat at the same time. I really can't do this. Well, what that means is that Coinbase's share that they take from retail or institutional buyers will go up. And that also means that if it is going up and Coinbase is a large percentage of the overall marketplace, that, that not only is their take rate of the higher prices going up, but also, people have to be transacting for the price to go up. And, regardless if people are buying or selling, Coinbase takes their fee. But obviously, if the prices are higher, we'll take a higher cut. So we do want the market cap to come back. And then with that, if we can continue to grow all of the subscription services, then maybe we'll have, both of those things growing at the exact same time. That really would be a better Coinbase, and a way for us to get to a higher price than what we were at IPO is if we actually have a great, more diversified revenue stream than just retail transactions. If you guys were reading the S1 or any of the files that actually came out whenever Coinbase was first IPOing, you would see that like almost all of it was 90 something percent. I don't want to make up the number, but it was in the high 90s for sure. Of their revenue was just transactional based revenue, and the majority, that probably 90% of that was retail. Was people like you and me purchasing, because the rates are much higher doing that. So in a way, it's a really, really good thing that we're actually diversifying, because if things do come back, we'll come back stronger. But yeah, there wasn't really, I was kind of disappointed with the call. They didn't say much. They said, we're restructuring, we're trying to get the cost down, stock-based compensation will be lowered and everything along these lines, but that's nothing anywhere different than any growth story on the entire stock market. So Coinbase is worried about regulation. That's probably what you should be worried about if you are a stock or a shareholder. I wouldn't go overly, heavy in any sort of crypto, because it could absolutely just, get the gavel and there we go. We're gone. And right now we're worried about the our staking revenue. Staking for retail investors is sort of at a cross point. Brian Armstrong on Twitter spoke about this a lot. He went to Washington, like he said, to go fight this. But then again, it's only 3% of our revenue overall anyway. So but it's just another foot to drop. Like, for example, it was Coinbase loans back in the day. That sort of got slapped away from us by Gary Gensler, the SEC. And then we lost a huge part of our revenue stream. If we then lose staking and these sorts of things, like the reason why I like having crypto, like I said, is to pay people internationally. But the reason why I'm holding crypto right now is because of staking. If I'm not allowed to hold these coins, and I'm not allowed to earn any sort of interest rate on my coins while I'm actually sitting here, I would just choose a way less risky, thing to invest in if I didn't have that guaranteed, sort of interest payment going forward. I would definitely just, involve myself in a different equity or something along these lines. So it does also hurt transaction volume and everything like this, not just the staking fees. It's the reason why a lot of people invest going forward at all. Okay. Yeah, no, Kathy Wood is propping it up. I forget what she actually holds. Maybe we can go take a look at that as well. Kathy Wood holds a ton of Coinbase. And it's because really they're the only real regulated player in this space. Like, if it does work, guys, here's the thing. Let me get a little bullish real quick. If it does work and Coinbase does actually, or able to actually pull off what they want in terms of regulation, they are actually rallying for retailers to have, the staking fees and everything like this. And USDC is considered, just as good as maybe a US dollar. Like Jerome Powell says, there's no reason why it shouldn't be, as long as they're regulated. Then yeah, this could absolutely be a massive asset class, just like any stock, real estate, or anything along these lines. And Coinbase would be truly, probably even higher than Binance, if they can actually expand globally, the most trusted name in cryptocurrency. And that would be absolutely massive. Right now, Binance just has an amazing grip on international markets, where crypto right now is probably more needed. And in that case, they're doing unbelievably, but there's not a lot of trust there. It's just really, they're the only big player. Coinbase, is doing the slow, thought out approach, but it's working. It's working very well. But guys, aside from that, I'm going to let you go. If you guys want, I'll make a video of this. I am working on a PayPal video right now. I'm working on a new Holdings versus SoFi Technologies video. I've got a chat coming up with a ex hedge fund manager that now holds SoFi. A lot of fun videos, especially around SoFi. But I also want to get a grip on the entire, fintech space, because it's important for us to see these markets. Now, Coinbase is probably a stretch, compared to the other fintechs, because it's a little bit in different markets. But I also like to diversify in that sense too, that if there is one market that's actually growing versus another, that, I have a little bit of, skin in that game as well. Okay. Bitcoin is going to 10,000. I don't agree with you, but that's perfectly fine. How do you feel about Charlie Munger and Warren Buffett's thoughts on crypto? I don't know. How well do they know it? Is it rat poison? Potentially. I mean, the thing is that I don't see the rat poison whenever I'm paying my editor and I'm getting a real service out of it. You know what I mean? In terms of some cryptocurrencies or a market in total, especially the ones that they're probably looking at, Bitcoin and Ethereum and these sorts of things, where the fees are high and they're maximizing on security, I can see why they don't believe in it. It can seem like a Ponzi scheme, and there has been tons and tons of schemes in it. And regulation is still one of the biggest concerns. So I can see where they're definitely coming from. It's just, I think, until even if cryptocurrencies in itself does not end up, being what ends up, creating a remittancy market or something along these lines, the actual technology will still be a large portion of this. Or even if, for example, there is a central bank digital currency, in that way, it's still the same technology that cryptocurrency is using. It's just literally backed by the US dollar. So in that sense, no, I don't necessarily agree with their thoughts. But it is risky. Like, I don't know. It's hard to bet against Warren Buffett and Charlie Munger, even if they're not a super fan of the industry. But yeah, and let's say a central bank digital currency even came out. I'm sure Coinbase would play a large role in actually facilitating a lot of those transactions, or holding it on external wallets or something along these lines. It'll depend how it actually comes out. I don't know too much information about it. All I know is that actually PayPal is looking to play a large role in central bank digital currencies as well, and I can't see how Coinbase wouldn't be a part of that as well. But guys, hopefully, stay tuned for videos to come out soon, and yeah, let me know what you guys want to see next. I'm definitely doing the Block Incorporated video, though, live stream. I can't wait to see what Jack Dorsey has to say about the, new moves of what's happening at Cash App, because all I can see is that app growing like crazy on the App Store. I mean, the member count just must be off the charts. Very, very exciting. But anyway, thank you so much. If you could, hit the like button. But aside from that,